Hello everyone, this is John from Data Finance. Welcome back to our channel. We are with you on 24th of November afternoon analysis. All right, let's speak about some news, then we will just talk about our charts. First of all, we have received US durable goods, and then it was less than expected, and it has declined month over month, 0.5. So it has declined. In that one, we see not a recovery, and we have received jobless benefit claims, and that is historic low. It is the lowest number. It's only 199K, almost 200K, and that is the lowest level since 1969. Yeah, it's almost 50 years, more than 50 years low area. That's good news for U.S. labor force, and a lot of people are going back to work. And even in some sectors, we are seeing that labor shortages, and then a lot of job openings are still there, and we may see lower levels of this one. This is making the expectation of faster rate hike and then faster tapering more and more. That is the main driver, because with this progress, Fed has told us when we see low unemployment rate, then we will just do tightening progress. So with these low jobless benefit claims, probably we will receive really low level of unemployment in US next month. And when that happens, then we will see faster tightening policies, because if there's a working class and then at the same time quantitative easing, that's really problematic. So people don't need to get inflation, so people are working already. No need for stimulus packages, no need for quantitative easing. So monetary policy will just be tightening. So people earn and then spend properly, and there will be balance. If quantitative easing and like a low unemployment happens at the same time, then we will see higher demand for goods, and then that will cause higher inflation. Fed doesn't want that one. That's why we see decline in stocks, and then we see rise in dollar index and also US 10 years bonds. All right, let's start with our chart. Right now we are checking Nasdaq US100 chart. As you can see here, big tech companies are just getting sold. Their stocks are already was high, and Tesla and some other companies as well are leading this sell-off, and we see low level in Nasdaq. Let me just remind you, just 2 days ago we have refreshed our highest level in Nasdaq, and right now we are just yeah, exactly 600 points down from all the time high level, and that is really sharp decline. So what is expecting us in the near future? And actually, like tonight on FMC, if you just hear more tightening policy, if you just like hear more hawkish speeches in FMC minutes, we will definitely see 16K levels in Nasdaq, and then we can just see more sell-off in these indices. All right, let's look at our next chart.
You are ready to win with us. GAN Markets.
All right, we can see here we are on natural gas chart. In natural gas, it is only balancing on the last, if we just check here, on the last 5 days, it's just going up and down in resistance and support line, and resistance area is 516, and then the support area is 479. Between these range we see going up and forward, it's just leveling, it's just accumulating in here. So what can we expect in natural gas? It's all depending on demand and supply. The bottlenecks in supply issues are getting solved. That's why we don't see historical highs of like a 6.500 levels. We don't see those levels right now. We are getting low levels, and if we see progress on these supply problems, if we just see easing in these problems, we may see lower levels. Reason, because it's high already, like compared to month over month in the next year, last year, this year is almost like a not almost, actually like exactly more than 100% high level. So we may see lower levels if we see easing of these supply issues, but demand as well. Many countries are, in Europe especially, are just phasing out coal plants for electricity, and then they are taking natural gas and renewables. All right, I know natural gas also fossil fuel, and then Europe focusing on renewables, but they have to keep the grid on. So they say at least we just harm less compared to coal, and then with natural gas. That's why we see demand side is still on rise in natural gas. So if we see both the supply sides as well go higher, then a price decline, especially Nord Stream 2. This is important. And there's a technical problems in there, because I have told you like a recent weeks, and then a certification progress has been halted in Germany, and the reason was the company like doing business is based on Switzerland. So the country using the gas is Germany, and then supplying is Russia, but the company running the pipeline is based on Switzerland because of like a US sanctions. And Germany said if there's a conflict, so we cannot deal with like a Swiss courts, so it has to be a German-based company to run this pipeline. Then we can regulate, and then we can deal with this company easily on any conflict or any problem. That's why that is happening right now. And if it's completed soon, if there's that company opening progress complete soon, then we may see go on the certification, and after certification there will be a lot of gas pumping from Russia to Europe, and then it will ease the price of natural gas. But if this doesn't happen, and then if we see sudden weather change in Europe and in the US, then we will see another hike in natural gas prices. Please keep in mind. All right, let's look at our last chart. All right, global food inflation is not stopping, and then wheat is fueling that inflation over and over. Right now, as you can see on the chart, we see really high prices of wheat. Actually, and we were expecting these high levels, like 850 levels, because high oil prices is causing like the price of fertilizers and other like things making more expensive. There is a lagging, because like when you just sell like a high oil prices, it just goes to refinery, and from refinery to farmers, and then farmers like they just take the yield, and on that yield they just calculate their cost, and then they say, oh, no, we cannot sell these because okay, we have bought the oil at this price and then not the current prices, so we have to charge you more and more. So we may see high food prices and wheat prices, especially more than this, if the government doesn't make any attempt we have seen these one in oil prices, like they have stepped in and then they said, all right, we are using our strategical reserves to make the price of oil down, and then if we don't see the same thing in wheat prices, we will go higher. But in my opinion, there has to be something like that, because the main reason is that, I'm just saying this again, in Arab Spring, the price was high, and then there has been a lot of unrest, and then the people are getting so pissed off with these prices, and then especially even the basic foods, the bread. If they cannot afford that one, there will be another unrest in globally, and so governments has seen this story and they don't want to take another risk. So I think they will do something, at least like with lowering the oil prices. Even for that one is something. It's not directly but indirectly affecting the price of other commodities and agricultural commodities, because all are dependent. The fuel costs in farming, fuels are so important. It's the most basic, and also fertilizer prices are also really depending on oil prices. Then we will see high food prices for a few months more if any step not taken. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you tomorrow. Tonight is FOMC, as I said, that's really important for the market. Bye.